This is the briefing for Friday, September 22nd. Yesterday, I talked about the market being oversold and to the point of almost being extremely oversold. Now, this is my indicator for the NYSE and this is the NASDAQ. And you can see this is yesterday's oversold reading. And that led me to state that we had to anticipate the possibility of some type of pause or rotation. One, I said, watch out for lower prices below yesterday's low and stronger breadth. That would suggest a pause or some type of rotation back up. I did also said that there's a possibility that this market could accelerate to the downside, even though it's extremely oversold. But that didn't happen. We had the pause as I anticipated. And you can see that today we worked off a lot of that oversold condition, not so much in the NASDAQ, but certainly in the NYSE, which gives the market on Monday a real decision process to go through because we are at extremely important support levels. Now, this has been a very interesting couple of weeks going all the way back to, I think this is August 18th. Yeah, it's August 18th when this low occurred at this 430 level in the spiders. It was a make or break time. It was either we're going to go in vertical development lower or we're going to rotate back up. And I pointed out that this was an area of rotation and that potentially we could go up even to test 460 and then come back down to test 430 again. As it turned out, as this move started, this developed into a three-step counter trend rotation where we were able to project the end of leg 3, and then this occurred without taking out this low. And then this developed into a three-step counter trend rotation where we were able to project the leg 3. Looking at this as a three-step counter trend rotation in a longer-term time frame, we were able to project pretty close to coming into this high here, and then to expect the potential for some type of rotation back to the downside, which is what we got. And then, of course, we looked at this move here, and I suggested that if this high were taken out, then we are simply in a rotational pattern where we're going to test this high, potentially come back down and go back up and test it again. But that high wasn't taken out. In fact, you can see there was about 4 or 5 days of pause right through here. There was an attempted breakout, but the next day we broke back to through support. And then, of course, traded right down to this low. The following 2 days later, we broke that low. And then, of course, the market started accelerating to the downside. So basically, and then I talked about this pattern here as being a fairly bearish pattern that I have seen in the past and have traded successfully in the past as well. So the question was, is this a pattern in which we're going to see a good impulsive move to the downside, or are we just completing another round of rotation and we're going to hold at this support level and then trade back to the upside? So it was going to be interesting to see what happened in today's trading, mainly because we tested that lower support level yesterday and we were at an extreme oversold condition. So we had to expect a pause, which is exactly what we got. Now, you can see in today's trading, we had lower volume. Now, that's typically one of the signs of a counter trend rotation is that they happen on lower volume and they work off an overbought or oversold condition fairly quickly. And a lot of times in one day, which is exactly what occurred in today's trading. You can see we got a little bit of bounce in 52-week highs minus 52-week lows. But you can see yesterday's trading where we were. We have to go all the way back to March before we see an indication that's right through here, an indication of the 52-week highs minus 52-week lows being any weaker than they are right now. Other internal components, which I'll get to in a few minutes, are basically very, very weak and continuing to weaken as well. So you can see it's pretty obvious that if we break through 430, then the first next level of support is going to be right here at this red trend line, right at the 427 area. And that's where this leg is equal to this leg. Now, if this is the bearish day pattern that I shouldn't say day pattern, but bearish pattern that I have seen in the past, then 427 is going to get blown through pretty quickly and potentially on Monday. The next level of support is going to come around 418, and then below that is going to be about the 404 area, which is going to be a very, very important area. If that's taken out, then we're looking at 380 and potentially even lower after that. So what happens here now is one of two things, or one of three things. So the first one is that we're going to bounce off of this, off of 430, and we're going to see another rotation back to the upside. I think that is the lower probability, at least at this point in time. The second possibility is that this is a three-step counter trend move, and we're going to come down where there's equality between leg 1 and 3, and that's going to either test the 427 area or potentially take it out slightly, and then we're going to see another rotation back to the upside. The third possibility, and I think this is becoming potentially the higher probability, is that this is a bearish pattern, and we're going to see 430 taken out, 427 is going to get blown through, and the next level is of support is going to come in right around the 417, 418 area. Now, in the NASDAQ, in the Qs, you can see we're in the same situation. You can see this move to the downside. You can see the rotational pattern that's occurring. And this support level comes in at 356. So we're right there. We tested yesterday's low, where equality between this leg and this leg comes in the Qs at 347. Breaking that would then open up the potential to trade down to the 424 area. Once again, volume falling off in the Qs on this pause, and of course breadth strengthening slightly, which helped work off the oversold condition. Now the Russell is a little bit different. You can see the Russell didn't really have that three-step counter trend rotation we're talking about here. This was more of an impulsive move, and we have a head and shoulders top. So we have basically two possibilities here. The first one is this is a three-step counter trend rotation, and it's going to project the third leg where it being equal to the first leg at the 174, 175 area. The second possibility is that this is a head and shoulders top. It's going to play out as a head and shoulders top, and the distance from the head to the neckline is going to project the possibility of trading all the way down to the 165 area. So I would watch the Russell very, very carefully. And you can see the Russell is showing more weakness than the other indices. And even though volume was down today, we got somewhat of a pause. But I would expect to see the Russell potentially, if we are trading through, if we trade through the 175 area, then that suggests to me that the potential for trading down to 170, the next level of support, and potentially down to the 165 area are increasing in probabilities pretty dramatically. Now, on a weekly basis, you can see this is pretty important. This is the 170 area right through here, which is the low of this area of rotation. But that potentially, if that's broken, that's going to open up trading down to about the 162 area. That would be a very important area because this is a weekly chart of the IWM. And you can go all the way back to basically back to right here, which is April 15th of 2022. And the Russell has really gone nowhere, as you can see. If this were broken, then that's going to open up a very dramatic bearish situation in the indices. But before we get there, we've got other areas of support that will need to be tested and potentially taken out. And we'll know whether those probabilities, or the probability of testing that lower extreme on the weekly chart, is becoming a higher probability, or potentially will become a lower probability if we see some type of pause or even if this 170 area holds on any additional thrust lower. So keep an eye on the Russell, on the IWM. I think it will give you an indication of whether we're going to be seeing lower prices. Now, the other thing to consider, we closed at the low of the day today in all the indices, and that suggests that the market would have continued going lower if it hadn't closed. So that suggests the possibility of potentially lower prices in Monday's trading. If we do get lower prices, it's going to be important to see volume begin to tick back up again, to see breadth falling off again, and to seeing the other internals beginning to weaken as well. Remember, we are neutral in terms of overbought and oversold. In terms of total volume on the NYSE, you can see it was picking up going into yesterday's trading. You can see it was sold off. It was lower in today's trading, and the same thing occurred in the NASDAQ. NASDAQ volume fell off pretty dramatically in today's trading. All characteristics of a counter trend rotation, at least at this point in time. There is a real possibility we could see an acceleration of prices the first part of next week to the downside. If by chance these support levels hold, then the higher probability is the fact that we're going to be rotating back up. And this is just the continuation of a rotational area. And we'll have to see what happens once we test that 460 level again in the spiders. Now, looking at other internals that I keep an eye on, these is the percentage of stocks above the 50-day and 200-day moving average for the S&P 500, and you can see how deteriorating this has been. This is pretty dramatic in terms of only 18% of the stocks in the S&P 500 are trading above their 50-day moving average. Only 41% are trading above their 200-day moving average. In terms of the NASDAQ, you can see it's almost as bad. 22%, 23% trading above their 50-day moving average, and only 32% trading above the 200-day moving average. And the Russell, even worse, 16% trading below their 50-day moving average, 16% trading above their 50-day moving average, and 31% trading above their 200-day moving average. So it's pretty dramatic as to what's happening from an internal perspective with the stock indices. I'm going to go back to the NASDAQ here just for a second. I want to change this to a weekly chart, mainly because I want to show where the weakness is in terms of price development. Now, this is the percentage of stocks on the NASDAQ above its 50-day moving average. So if we look here, this is right about the 2250 area trading above their 50-day moving average. You can see where price is. If we go back to here, and let me see if I can get this right there, right there. So right there, if you look down, and you can see on 930, that's the similar level to where we are right now. And you can see price was at 273.18 in the Qs. Price is at 357, 358 in the Qs today. So based on the weakness of the internals, price is holding up nicely. So if we do begin to see an impulsive move to the downside, this market could accelerate pretty dramatically in terms of price. On the other hand, if we look at that from a positive perspective, it suggests that there's still strength in the market, and price is holding up nicely, and that could lead us to the rotational possibility that I've been talking about for the last several briefings. Now, once again, I want to go back to the S&P 500 or the spiders, mainly because the chart pattern just gives us a little bit better picture. Keep in mind two possibilities here. One is that we're going to rotate back up. The second is that we're going to break through this 430 level and we're going to see lower support. Breaking through this level would suggest that, and closing substantially below that level would suggest this rotational pattern has been negated, and we're in the process potentially of a very bearish pattern where we could see an acceleration of prices to the downside. But important to that will be what happens at these levels of support, and I'll be covering those in future briefings if and when that were to occur. Going to be a very, very important beginning to next week. I'll pick the briefing up for subscribers on Monday. Have a great weekend.